Okay, good afternoon and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And during today's session, I want to spend some time to go over and review all of the different tools and services that you have access to as part of your OptionsPlay membership. It doesn't matter whether you're a free trial user or you're currently a member, or if you're just learning about OptionsPlay for the first time. I want to go through the different resources that you have at your disposal when you are using OptionsPlay so that you understand how to access all of them, making sure that you understand what's available so that you can take advantage of all of the resources to help you navigate the markets. So let's go ahead and get started. Before we do, anything I discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So during today's session, I'm going to do a quick platform overview just to give everyone an understanding as to how to utilize the platform. So if you have an idea, whether it's an idea initiated by our research team, whether it's an idea that you've created on your own or somewhere else that you've got the idea from, how do you actually go about evaluating it? Some of the technical indicators that you can look at, some of the analysis techniques to understand whether the option strategy that you want to trade makes sense, and just getting a sense for risk to reward ratios. Those are going to be really important for you to understand. And then I want to show you the OptionsPlay Hub. This is where a lot of the resources that we provide live. Different income generating reports, education, scanners. These are all available here through the OptionsPlay Hub. And then I want to talk to you about the daily play, the ideas that we send out to you every single day, what they are, kind of what the best practices are around trading them, and then taking a look at the different weekly events that we host, whether it's education events like we're doing here today, the market outlook sessions that we do on Tuesday, or the rapid fire sessions that we're doing tomorrow morning, and then taking a look at some of the new features that recently have been released and the new features that are coming out here over the next couple of months. And at the very end, I'll open this up for Q&A. But the primary question that I want to help everyone walk away from today's session is a clear understanding as to how can you maximize your OptionsPlay membership for both your trading and your learning experience with respect to options and analysis. So my name is Tony Zhang. I'm the chief strategist here at OptionsPlay. Hopefully today I'll give you a quick overview of kind of the broad range of resources that you have access to as part of your OptionsPlay membership. So at the core of it is really going to be some of the ideas that we send out every single day, as well as the OptionsPlay platform. So the daily play ideas are signals that we send out to you every single morning. They are delivered to your inbox at 6 a.m. Eastern every single day. And the signals are either an entry or exit signal with a specific options trade idea. Now, this is really where we take our fundamentals and we take a look at technicals, and we look for stocks that are aligned from a technical and fundamental perspective. And we generally give you either a credit or debit spread to trade. Occasionally, we'll trade some diagonals or outright calls and puts, but largely most of the trades that we make are going to be credit or debit spreads. And you can take a look at all of our trades here using this link here on your screen. But just to walk everyone through, some of the rules around using these signals, because we've been getting a lot of questions sometimes regarding the validity of these signals, whether or not you should trade them, how you should enter these orders. So I want to make sure that we understand how to go about utilizing them. So when we think about the open and exit signals, because the signals that we send out have a specific expiration date, strike price, and price for the option strategy, we always recommend that you enter these orders after the market opens, meaning don't place these orders before the market opens, because you never know whether bid-ask spreads are widened near the open, what the prices are going to be at the open. So we always want to let the first few trades go through, let the spreads tighten up before we place our order so that we know where the market is. You want to place your order near where the current market is. Now, the general rule of thumb here is around validity of a trade, right? Sometimes the market opens substantially higher, substantially lower. How do you know if a trade is still valid? Generally, the rule of thumb here is that when you're able to price your options price, so if the market opens within 10% of the quoted price that we sent out as part of the signal, generally speaking, it is still a valid trade. So just make sure if, let's say, for example, we send out a trade that's currently at $2 credit, your range here is somewhere between $1.80 and $2.20, basically 10% of the quoted price. If you're within 10%, that's still considered a valid trade. If it exceeds that 10%, then it's a trade that perhaps you need to adjust the strike prices or reconsider whether it's a trade that you want to make. But the most important part about the daily play, more important than anything else, is the fact that you should never risk more than 2% of your total portfolio value on that trade. So we have a risk and investment calculator on OptionsPlay. I'll show you here in 1 second how to go about using it. But this is really the tool that helps you calculate the appropriate number of contracts to trade. I cannot tell you how important it is to make sure that you stay within your risk tolerances. If you start to exceed your risk tolerances and the trade goes in the opposite direction that you or I expect it to, that's really where you can get yourself into a lot of trouble. There's only one way to prevent that, and that's to minimize your risk. And you can track all of the trades, the open trades that we have in our OptionsPlay portfolio tool inside of OptionsPlay. So all of the open trades you'll be able to see within our platform. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. And the two most important rules are these two rules: entering a trade within 10% of the quoted price, and making sure that you calculate the number of contracts that is suitable based on your account value. So right now, what I think we should do is just quickly review a specific trade setup and how to calculate a potential number of contracts. So this is purely for educational purposes. This is not a trade signal or a recommendation. If, let's say, you were bullish on Cameco, the uranium enriching company, and let's say you were looking at buying the November 21/27 call vertical, which currently costs $188 per contract. Let's say you have a $25,000 account, right? We'll multiply that by 0.02, which is 2% of that total portfolio value. That comes out to be $500. So the most you can risk on this particular trade is $500, which is 2% of your total portfolio value. What you can use is the risk and investment calculator, which is the third button here at the bottom of your screen. And using the risk and investment calculator, you can select I want to risk, and you can type in $500. And in this particular case, what it's going to do is it's going to calculate the number of contracts that you can purchase for any strategy that you type in. And it's going to approximate exactly how many contracts you can trade, or number of shares that you can trade, where you're risking roughly about $500 or no more than $500. So if we look at this particular trade, the 2 call options will risk $494. Risk 2 call verticals will only risk $376. This will help you stay within your risk tolerances so that no matter how a trade works out, whether it works out great and it goes exactly your expected direction, or works out exactly in the opposite direction that you expect it to, that you don't have huge losses in your portfolio. That's how you survive as a trader, is by thinking about long-term and surviving any downturns in the market, surviving any periods of consecutive losses. The only way you can do that is by maintaining your risk profile. So calculate your portfolio size, multiply it by 0.02 or 2%, and that is the number that you want to enter into the risk and investment calculator. Does that make sense? Please type 2 into the chat window if that makes sense to you. This applies for any trade you make. Doesn't matter whether you're trading a trade that's sent out by OptionsPlay Research. Maybe you subscribe to other newsletters that give you research. This platform will allow you to scan for any type of opportunities in the markets for these types of checks, right? So if you get your own ideas, if you get your ideas from another newsletter, if you get your ideas through us, doesn't matter. Plug it into OptionsPlay, use the risk and investment calculator, and calculate the appropriate number of contracts. It will pay a lot of dividends in the long run for you and your portfolio's value, okay? So and then at the core of the platform is really this tool that gives you the ability to take any idea that you have in the broader markets and easily do some sanity checks across the board, okay? So when we send out a trade idea, couple of things that you should always look for. You should always look at the 1 month and 6 month trend and the technical score. Now, this doesn't mean that this is the only metric that matters, but usually the market is pretty good at giving you a sense for whether the stock that you're looking at or the ETF that you're looking at is favorable or not. Favorable stocks tend to outperform the market. Unfavorable stocks tend to underperform the market. And stocks that are in favor and trending higher will typically have strong trends, right? And as trends deteriorate, you'll see how those trends change over time. So let's just take a look at this chart a little bit longer, right? So I'll just zoom out a little bit here. At the bottom of your screen, and I'll make this actually a little larger so that everyone can see. As you can see here at the bottom of your screen, this is our 1 month and 6 month trend indicator. As you can see, our 1 month and 6 month trend indicator gives you a sense for how the trend of a stock is currently trending. So the 6 month trend, as you can see, stayed positive from November 19th, all the way through April 15th or so. And during that time, a couple of times, the 1 month indicator started to turn neutral or slightly bearish, but not for very long. And then once the thing started to turn sideways, once the stock started to move no longer any higher, that's when the 6 month trend also turned neutral and never turned bearish, but it did then again resume its bullish trend here back in April 28th before the market started to rally here again. And as soon as you had this dip, that's when trends started to deteriorate again. And things started to turn negative here on June 29th. As you can say, the trends deteriorated all the way through about here on August 27th, when things started to turn bullish again and things really took off here again, right? So our 1 month and 6 month trend indicator helps you stay on the right side of the trend. And not only do you want to stay on the right side of the trend, you also want to get a sense for how long a stock has been in a trend for. Because do you want to be in the trend here, or do you want to enter the trend up here? I think we all know that we prefer to be on the earlier side of a trend. So the 1 month and 6 month trend indicator helps you understand how long a stock has been in a trend for, whether it's pulled back here. And if you start to see the trends turn bullish again here, that might be a good opportunity to look for a further entry. And then the technical score. This is to give you a sense for how strong is the stock relative to the market. The trend indicators only tell you how the stock is doing against itself. But you also want to know, is this a stock that's outperforming the market, or is it underperforming the market? So this indicator gives you the ability to quickly get a sense for whether a stock is outperforming the market or underperforming the market. Generally speaking, we want to buy stocks that are outperforming the market and short stocks that are underperforming the market. Does that make sense? Please type 3 into the chat window if that makes sense to you. So regardless of where you get your ideas, from your own research, from someone else's research, from our research, I always encourage investors, type in the symbol that you are looking at. Take a look at whether a stock is outperforming the broader markets and starting to turn south, such as Facebook. Very strong stock, has been outperforming the market since March of this year, outperforming the market. And just a few weeks ago, on September 20th, things started to turn south here. And this is really the first indication of a break of what was a very large bullish trend, right? As soon as it broke that trend, our trend indicators turned negative. This hopefully helped you either exit a long trade that you were in or look at initiating potentially a short opportunity. Now, this is still a strong stock, right? It still outperforms the broader markets. This is a little bit more speculative, right? But strong stocks usually tend to have some of the biggest falls. So this is really where you can use our technical score, our 1 month and 6 month trend indicator to quickly gauge any views on any stock that you have. And even, I think some of the most powerful tools that we have is our watch list, because you can either use one of our current watch lists, like our rapid fire symbols, which I'll show you here in 1 second, or if you create your own watch list. And what you can do is you can quickly sort it based on the score. And what that allows you to do is instantly take any list of stocks that you're looking at and see which stocks are outperforming the market, which stocks are underperforming the market, which ones have bullish trends, which ones have bearish trends, instantly without even having to pull up the chart for that underlying stock. So this is my bullish watch list. As you can see, it's all stocks with a high score. And as you can see, it's pretty much all green across the board. So not only are these stocks that are outperforming the market, these are stocks that are also trending higher. And I can quickly click on a link, click on a symbol and see, Is this a stock that recently started a bullish trend like United Rental has? Or is this a stock that's been in a bullish trend for a long time, like Netflix? It's been bullish since August 16th. These are the types of things that you might want to just do a sanity check on any ideas that you have, so that, I know that trading sometimes is emotional, sometimes is, you get caught up in the emotion. You read a research piece or you see something on TV or someone else told you about a stock that you should look at. Before you act on that particular idea, plug it into OptionsPlay. See if it aligns up with what the market is telling you, whether it's trending higher, whether it's outperforming the market, and more importantly, is it a little bit late? Sometimes you might find a great idea, but it's a stock that's already had a really long run here, like Palo Alto Networks, right? It seems like a great stock, right? It's technical score of 10, 1 month and 6 months trend is fairly strong here, but this is a stock that's been bullish since May of this year, right? This is a $350 stock. Now it's $473. Great idea, but maybe a little bit late. These are the things that you want to understand before you place a trade. And then once you do have a trade idea, let's say you have a specific trade setup, whether it's a setup that you created on your own, or if it's a setup that you got somewhere else, you have some other newsletter that tells you it's time to sell an iron condor on Palo Alto Networks. No matter where you get your ideas, put that idea into OptionsPlay. Whether it's a condor, a butterfly, whatever that is, a credit spread, debit spread, use the P&L simulator. See how the strategy will perform if the stock does exactly that you expect it to, if the stock does exactly the opposite of what you expect it to. Know how much you can potentially risk and how much you can potentially lose is going to be invaluable information, because that prepares you for when you're in the trade, what you can expect. I cannot tell you how much, I've seen traders panic because they didn't do their homework before they got into a trade. And once they're in a trade and the trade is maybe not going in the direction they expected to, they're looking at this loss and they're surprised at how much they're losing on a particular trade, or didn't understand when they would lose that trade. So not only do you have to look at where the stock goes, you also have to look at, how does the trade profit, right? Sometimes, if the stock stays exactly where it is and a week later, you barely see a profit. And then you realize that you really have to hold this all the way through expiration. And most of your gains happen in the last few weeks. That could be a surprise to you. And these are some of the things that are important to know, because you could hold the trade halfway through expiration and only make 25% of the potential P&L, even if the stock stays exactly where you would like to be, dead center in this iron condor, for example, right? And then you realize that most of the profits actually come in the later half, and it's a surprise to you. So these are some of the things that you really have to make sure you understand before you place a trade. And that's what OptionsPlay is designed to do. And more importantly, for those of you that are new, you can paper trade these strategies. You can click on the blue share button and use this link here to save a trade. And when you save a trade, it simply just allows you to paper trade this and track this trade between now through expiration. If you're brand new to a strategy, if you've never traded an iron condor before, or some other strategy that you're learning, or someone else told you about a strategy, use the paper trading feature, and all of your paper trades show up under your profile. You'll be able to see it under shared trades. And when you look at your trades, you'll be able to see all the previously traded strategies. If you click on an old strategy, it'll bring it up. And it will show you how the strategy is performing so that you can track it day to day and see whether you're making money, losing money as you expect it to. So hopefully when you're ready to place that trade with your real money, nothing surprises you. You know exactly what to expect. So between the P&L simulator that prepares you and gives you that homework, what the paper trading tool will allow you to do is actually simulate those trades. And just for one last time, just to show you how to place that trade, for any trade that you want to place, you click on the blue share button on any trade. When you click on the blue share button, you will be able to see this link here on the right-hand side. When you click on that, that will save the trade in your profile. And you can find all of your trades under your profile. So this is all designed so that no matter where you get your ideas, you can have a sanity check on the underlying stock itself, whether it's trending in the direction you expect it to, whether you're early or you're late. And then on your option strategy, you know exactly how much you can potentially lose or make before you get into a trade. And if you need to paper trade it, go ahead and do that so that you can track it on your own. Okay, does that make sense, everyone? Please type 4 into the chat window if that makes sense to you. And just one last thing on the platform, right? There's a lot of things on this platform. I couldn't go through everything here today, but that's why we have a few different things that are designed to help you. We have a guide, we have an FAQ, and we have a platform walkthrough in the lower left-hand corner. That's designed to help you guide you through the platform. But if, let's say, you don't know how to use something, you can use the questions ask us section here on the upper right-hand corner. Those tickets go to our support team. We're here to help answer your questions. And this is, so if you have a question regarding, what you're looking on the platform, you can send us a message, and you can even attach a screenshot of the platform so that we can see what you are looking at if you have some questions. So always feel free to contact us and our support team on the platform. The next thing I want to go through is the OptionsPlay Hub. And the OptionsPlay Hub is what you find on the options and education and resources link here on the upper right-hand corner of your platform. And what that gets you to is the OptionsPlay Hub. The OptionsPlay Hub is where all of the different resources that we live is in one place. We have everything from a platform walkthrough that's designed to help. If you're brand new to OptionsPlay and you want a refresher as to how to utilize the platform, we have all of our upcoming events that you can look at our events calendar. We do at least three events a week. So if you want to know what's coming up, what you're going to be able to learn, the events calendar will show you that information. And then we put out a lot of commentary each week on what's currently going on at the market. We have market outlook, we have options education, we have members only content. This is all available to you through the OptionsPlay Hub. And then we have the different income reports. I don't quite have enough time to go through all of them, but I will go through as many as possible. But for example, we have our credit spread opportunity report. This is by far one of the most popular tools from traders. A lot of you like to sell credit spreads, and this report is designed to quickly find credit spreads that provide some type of edge in the broader market. So as you can see, we look at how the percentage of the width that you're collecting in terms of premium. These are trades or credit spreads where the risk to reward are skewed in your favor, where we collect more than 1/3 of the width and you're risking less than $2 for every $1 you can potentially make. A lot of credit spreads, you risk roughly $2 for every $1 you make. But let's say, for example, if you select something that has a width of 40%, that means you're only risking $1.50 for every $1 you can potentially make. And that half a dollar makes quite a bit of difference in the grand scheme of things when you place that trade over and over again. And this is a platform or a report that updates every single hour. And when you're using the credit spread opportunity report, you can actually click on the symbol here. So for example, if I click on Lockheed Martin here, it will actually bring up the trade in OptionsPlay. So this is designed to help make your analysis part as easy as possible because it brings up Lockheed Martin. You can see that it's a very weak stock. The 1 month and 6 month trend does not look particularly strong, and it gives you exactly the expiration date, strike price, and how much premium you're collecting. So for $555 of max reward, you're risking $495 on the back of it, and you have a probability of profit of about 68% or so, giving you all the metrics that you need to decide if this is a trade that you want to make. And then you can click on the trade button and see how to enter this trade into your broker's platform. This is designed to try to make your research process as quick as possible because you have all of the technical analysis information at your fingertips, and then you can do the options analysis also very quickly and decide whether it's a trade that you want to place for your platform. So the credit spread report is more for those of you who like to sell credit spreads, have a directional view, but we also have other reports such as cover calls and short puts. Cover calls are for stocks that you own, short puts are for stocks that you want to own. And these reports are designed to give you, pretty much all of the stocks in the S&P 500 and very liquid ETFs. And what we sort them by is the highest annualized return. So what you're trying to find is opportunities for stocks that you own to give you a large downside protection and generate some yield on the stocks that you own. So if we look at the cover call report, let's go back to the cover call report. This report covers, pretty much every single S&P 500 stock in the universe. And what you're able to do is see how much yield you're actually collecting. And what you can do is you can click on a stock and be able to see not only what expiration date and strike price are you selling, how much premium are you collecting using the midpoint, the distance to the strike, meaning how far does the stock need to rally before this stock is called away. And when you click on the stock, it'll show you the setup in OptionsPlay so that you can look at the yield and compare it to the dividend yield. So I always tell investors, look at the annualized yield, the 12-month projected yield, and compare it to the dividend yield. Now, a firm is a very volatile stock, so right now you can collect a lot of premium for this, but that's not always necessarily the case. This is a bit of an anomaly how much premium you're actually collecting here on a firm, but some of these volatile stocks, they do provide a lot of juicy premiums. And our goal of these credit spread reports is to show you where you have the highest premiums by selling stocks. And you can always search for the stocks that you want to, or the stocks that you own, and use this cover call report to find opportunities for your portfolio. And we do the same thing for short puts. Short puts are simply very similar strategy, but for stocks that you want to own. So for example, if you want to look at buying NEO, if you sold the $35 put, you'll collect $1.90. That's a 5.3% discount on the stock purchase. So you can click on this, the symbol and see that selling the October 29th $35 puts will collect you a little over 5% of the stock's value. And keep in mind, if you get a 5.33% discount on a stock that pays 0 dividends, remember, you're getting paid 5.33% over 29 days. If you annualize out throughout the year, that's 67% annualized return on your cash that you're setting aside to potentially own this stock. So even if this put expires worthless, you're collecting 5.33% on the cash that you're putting aside. That is a fair amount of premium to collect in 29 days. So this is really where you want to utilize these types of strategies for stocks that you want to acquire. And just like that, you can type in the stock that you want to acquire and look at the opportunities to sell a put on that specific name. This is all available to you through the short put report. We also have liquidity and IV ranking, but that's already built into your OptionsPlay platform. So for any symbol that you type in, you have the IV rank and you have the liquidity. This gives you a sense for whether the options that you're trading are liquid or not, and the implied volatility rank, something that a lot of you like to use in your trading, okay? So this is all available to you on our platform. And then for those of you that are a little bit more sophisticated in terms of the option strategies that you are trading, if you'd like to take on more risk and you want to collect more premium, you can sell straddles, you can sell strangles. We also offer this type of report for straddles and strangles. And this is really where we're looking for stocks that generate an outsized amount of premium if you sell the at-the-money straddle or if you sell an out-of-the-money strangle. And we show you what percentage of the stock price you're collecting as part of the strangle or straddle. And you can do this using our report, which is also available to you on the hub. Not suitable for everyone, but certainly a report that for those of you that are willing to take on the risk and understand the risk piece of it, you can find both straddles and strangles. Strangles are near the bottom of the report because strangles collect less premium, but you can select either a strangle or a straddle on any of these symbols. You can see there's a lot of them, right? And you can select how much premium you're actually collecting. And you can even sort and filter these. So if you want to say, only want to look at strangles instead of straddles, you can do that and see where can you get the most premium selling a strangle. So if you look at Nugget or Affirm, as you can see, you can collect 8% of the stock's value by selling a strangle. What's another one? Alcoa. A lower price stock right now that you can collect 7% of the underlying stock's value has an IV rank of 55%. That's part of why you're collecting so much premium. It does have earnings coming up, so you can know which stocks have earnings and which stocks do not have earnings. And some of you like to sell going into earnings, some of you like to avoid them. So this income report gives you the opportunity to scan for both. So regardless of what type of strategy you trade, credit spreads, cover calls, short puts, strangles, straddles, there's a different scanner and report built for you so that you can find the opportunities that generate the most yield for your trading. And lastly, we have our earnings calendar. Earnings calendar is really important for earnings season, which is just about to launch here in about a couple of weeks. We have banks kicking off the week of October, is it 11th, I think? Yeah, October 11th is when we start to see some banks kick off earnings season. It's important to know what stocks are reporting earnings. So you have an earnings calendar. This will show you I'll show you how to use this earnings calendar, and I will do a separate session here coming up. But as you can see, you have the dates across the top. And as you can see, the week of October 11th, pretty light on the earnings calendar, not a whole lot. But the following week, this is when things really start to heat up. As you can see, there are a lot more symbols the week after, and the following week, even more. And this is color coded for you so that you know the symbols in green are the most liquid. The ones in yellow are somewhat liquid, and anything that's white, meaning there's no color in it, these are symbols that are not very liquid. So whenever you're thinking about an earnings calendar, sometimes on a specific day, there may be 300 stocks reporting on that day. How do you sort through all of that? The reality is you can't. So what you do is you focus on the ones that have green first, right? Because those are the most liquid. And the ones with the asterisks are the ones that report in the mornings. The one without the asterisks are the one that report in the afternoon. So we built this earnings calendar to try to make it as easy as possible to know what should I focus on for that specific day. What coming up day focus in the mornings, so the night before, the ones in the afternoon, which ones are most liquid. Those are the ones that you want to focus your time on researching, on understanding whether you think the stock is going to be bullish or bearish, looking at the implied volatilities. Those are the types of stocks that you want to focus on going forward. Does that make sense, everyone? Please type 5 into the chat window if that makes sense to you. And I am doing a session on earnings season in the month of October, mid-October, as we kick off earnings season. I think I'm going to be doing that either on the 21st or the 14th, one of those 2 days. I'm still finalizing our October calendar, but one of these 2 days, I will be doing a session on earnings season, and we'll be looking at the earnings calendar together. We'll be looking at how I research an earnings play before I place a trade for earnings. So this is a really powerful tool during earnings season to give you an idea as far as what to look for and what to focus on for each given day. And then just to switch gears a little bit, we also host a lot of events throughout the week, like the one that you are on here today. And these events are designed to help you navigate the markets. Our Tuesday morning market outlook sessions gives you a macro view of the broader equity markets each week. We cover equities, we cover bonds, we cover commodities, and we cover the individual sectors. We look at what sectors are lagging, which sectors are leading, to give you a sense for where to focus your attention, including giving you our top trading ideas, stocks that are breaking out to the upside, stocks that are breaking down to the downside, and you get all of it as a member recorded so that you get the slides and the recording afterwards. I know some of you are on the West Coast, 9 a.m. is a little early, so you have this recording so you can watch it at your own time right after we finish each day. And you can access some of it at youtube.com/optionsplay. Make sure you subscribe and hit the notification bell to get access to these series. And we also host a bunch of members only series. We have a rapid fire session like the one we're doing tomorrow morning at 8:30 a.m. This is really where you as members, you can submit symbols to us and we put your symbols through our technical and fundamental scans, and we show you which symbols out of all of the hundreds and hundreds of symbols that you guys submit, which ones meet our technical and fundamental screening criteria. And I show you why the setups of the stocks that you submit to us, I think are relevant. So every single week, we try to go through brand new symbols from the ones that you submit and the ones that we think have the best setups from a technical and fundamental perspective. And what we started doing is we started creating these watch lists. So after each session, you have a list of all the stocks we referenced during that session, during our Tuesday morning market outlook session, as well as our rapid fire sessions. All of the symbols that we look at, we create a watch list so everyone can look at them afterwards. After each session, you can go through them one by one, see which ones you like, and potentially enter a trade on them once the market opens. Both of these sessions are right before the open so that you can have these ready to go at the open for you to do your analysis and potentially make a trade immediately on the back of that. We also send you the recording and the slides as well, but I think the watch list makes it a lot easier for you to sort through those opportunities and potentially place a trade. And then we do these Thursday afternoon sessions. These sessions are really focused more on education, showing you how to think about the markets, how to think about different option strategies, and how to utilize the different resources that you have available here at OptionsPlay. Just like this session here today, where we focus on the tools and services. Normally what we do is we focus on a specific option strategy. We show you how to utilize the reports and the platform to find opportunities, and then the best practices around trading those types of strategies. This is every single Thursday at 4:15 p.m. These sessions are also recorded. We cover a variety of topics, beginner, intermediate, and advanced. This is really your opportunity to learn option strategies, learn the OptionsPlay platform, and for you to ask questions on anything options related. And these are all recorded. You get the slides afterwards so that you can watch them at your own pace and make sure you developed the skills that you need to trade these types of strategies in your own trading account. And you can also subscribe at youtube.com/optionsplay, which I will post a link into the chat window for everyone who wants to subscribe. And make sure you hit the notification bell, because that's going to alert you every time we upload a video to our YouTube channel. So just to wrap up and give you some sense for some of the new features that are coming out here in Q4 of 2021, for those of you that are currently on a free trial or currently have a membership, we do have a mobile app coming up here in the next couple of months. This mobile app is for both iPhone and Android. You'll be able to access our education, our webinar recordings. You'll be able to access our Tuesday morning market outlook sessions, our daily plays, our income reports, and we're also going to be able to allow you to analyze basic strategies using the new OptionsPlay app. So this is something that we're really excited about, and I'm really excited about, and hopefully you'll be able to utilize a lot of the resources that I'm going to show you here today on the road when you do want to make a trade on your platform, on your mobile device. And we're also launching new ideas watch lists. We've been getting a lot of requests from the Tuesday and Friday outlook sessions and the rapid fire sessions to get ideas like that every single day. So we are going to be launching new ideas watch lists in our platform. So every single day we'll be scanning the market for technical and fundamental factors. And we're going to create these watch lists that will give you stocks that have momentum, the profitability and rising earnings for bullish trades, liquidity and relative strength. When all four of these things line up, they get onto our bullish watch list. And when all four of these things line up for the bearish side, they get onto our bearish watch list. This is how we scan for opportunities in the market when we send out daily plays, when we send out Tuesday morning market outlook sessions. And this is how we scan the hundreds of symbols that you submit every single week for the rapid fire sessions. You're going to be able to access all of that information through our new bullish and bearish watch list that we will be launching here in the next few weeks. So those are some of the things that are coming down the pipeline that we are working on at the very moment to help you better navigate the resources that we have here at OptionsPlay. So with that, that covers what I wanted to share with you here today. Like I said, if you're currently a member, you have access to everything I showed you here today. If you're currently on a free trial, membership is just $100 a month or $750 a year. And if you're brand new to OptionsPlay, if you've never seen this before, you can sign up for a free 30-day trial at OptionsPlay.com. I'll post this link into the chat window here for those of you that want to sign up for a free 30-day trial. Whether you're watching this live or watching the recording for this, you can sign up for your free trial at OptionsPlay.com. With that, that covers what I wanted to share with you. What I will do at this point is I'll open this up for Q&A. There's a chat window and there's a Q&A window. Please type your questions into the Q&A window, and I will try to answer as many questions as I have time for here today before I have to sign off. So like I said, there's a Q&A section and a chat window. Please type your questions into the Q&A section. Why place a credit spread versus a debit spread trade when you generally show a bull bear trade on stocks? I'm not sure what you mean by generally show a bull bear trade on stocks, Mark. If you don't mind clarifying, I'll try to answer your question. It would be helpful to me to be able to see if my paper trade would have worked if I sold on expiration date even after the option has expired. Currently, the share trade says the trade has expired. Sandra, thank you for your feedback. I will take that into account as we kind of continue to improve our paper trading features. Do you have any training on Thinkorswim? So Cornell, I have some training on Thinkorswim. I will say, I think the best resource to learn how to use Thinkorswim is Thinkorswim themselves. They have a ton of education on their website. I would recommend that you go to Thinkorswim for that. The cover call and the cover call recommendation on the platform under income gives different optimal cover calls. What's the difference? So Dave, when you're on the OptionsPlay platform, and you go to the income tab, you can create your own settings here. So what we show you here, the October 22nd, 520, are based on your settings, short, medium, or long-term, conservative, optimal, or aggressive. You can set these yourself. So our platform will always show you based on your settings. The cover call and short put reports are based on kind of generic settings across the board based on what we deem as best practices. So the platform gives you the ability to override that. That's up to you as to whether you use that. The reports are really scanning for generic best practices. Do all the stocks show up in the cover call and short put reports? Not every single stock shows up. There are certain criteria. First of all, it needs to collect enough income before it can show up there. It also needs to have liquidity. So, we are also at the same time looking to expand the list that we have for cover call and short puts. So, Charles, I appreciate the feedback, and that is something that we will work on, is expanding that list so we have more opportunities to show you, especially stocks that you currently own. Hello, Tony. The Straddle Triangle list, does it account for whether a stock is in a range by any chance? Jay, no, it does not, but that's something that we actually are actually about to implement. Whether a stock is trading in a range from a volatility perspective, just keep in mind the problem with that is that stocks that are in a range, that doesn't mean it's going to stay in a range, right? So that's sort of the tricky part. Just focusing on stocks that are currently in a range actually may not be the best time to sell a straddle or strangle. It's usually actually after a big move in the underlying stock. That's usually the best time to sell a straddle or strangle, because stocks tend to trade in a range after a big move. Once it's been trading in a range for a while, it actually has the highest opportunity of breaking out from that range. So just identifying stocks that are in a range is not necessarily the best time to sell a straddle or a strangle. Not to mention, after the stock is stuck in a range for a while, the implied volatility is relatively low. So what you're collecting on the straddle and the strangle is going to be relatively low in terms of premium. So for those reasons, that's why we don't identify stocks that are in a range in order to sell straddles and strangles. At the money straddle and strangle report request, instead of directly showing the list, SharePoint online sign in. It should not require that, because as you can see here, I'm not signed in. You can click on access now. You do need a membership if that's what you mean, but you don't need to SharePoint to access this. You do need to have an OptionsPlay membership or a free trial in order to access these reports. Oh, I see you were able to solve that. On the bullish watch list in OptionsPlay, URL has a green bar on the left, but it's down today. Does the bar color represent the 1 month trend or the technical score? The bar represents the trend. So if we're looking, if we go to watch list, I think you're talking about the bullish stocks list, and you're talking about URI. No, URI hasn't changed, right? But URI, as you can see, 1 month and 6 month trend is bullish here. But the score here, the score represents the technical score. And then the 1 month trend, the arrow is for the 1 month trend and the bar is for the 6 month trend. So you really get everything across the board on, all 3 data points. The technical score, the 1 month and 6 month trend, these 3 data points you get to see on your watch list before you even click on a chart. Amazing how you and OptionsPlay progressed even just over the last 13 months. Ron, thank you so much. We can, and this is all thanks to your support as members. I cannot, thank everyone who is a subscriber, who watches us and supports us on YouTube. It's because of your support that allows us to continue working on these new features and releasing them and getting them out to you. So please, we're about to send out a survey also as well to everyone who's a member or on a free trial just to get your feedback so we know what to prioritize and what to work on. These are the things that are important to us. And I hope that you guys will continue to support us and see the progress that we make and hopefully help you as traders as well. Julie, I really find your service valuable. This summer I was working on my house and didn't have much time for trading and utilizing the platform resources. I will be focused on trading once the house moves, and I look forward to using your resources again. Julie, congratulations, and I look forward to having you back as well. Daniel, do the short put and cover call reports always show all stocks in the S&P 500? Does it scan only stocks from the scanner? So it scans for liquidity, and we are, again, in the process of expanding that list so that we have a larger list of stocks that are in that scanner. But, and Daniel, you're the second person to comment on that. So we will make sure that we expand the list in the cover call and short put reports. Is the rapid fire watch list updated every single Friday morning? Lysandra, the rapid fire sessions are updated every time we do those sessions. Right now, we're doing them every 2 weeks. So every 2 weeks, the rapid fire session will update. The Tuesday morning market outlook sessions updates every Tuesday morning. And going forward, once I generate the bullish and bearish watch list, those will update every single day. How do we access your options charts? Donald, if you're referring to this platform, you can sign up for a free trial at OptionsPlay.com. If you don't have access to OptionsPlay, you can sign up for a platform at OptionsPlay.com. I've just sent a link into the chat window for everyone if you want to sign up. What's your opinion on synthetic portions to replicate stocks for those with limited capital? So if you're talking about, trading a synthetic stock, right? So bullish, long synthetic stock, as you can see, these two strategies are identical. Here's the thing is that, the max risk is the same, right? This might be slightly more capital efficient. So if you have, the way that you should think about this is that if you trade a synthetic stock position and you don't have all the cash, meaning you don't have $35,000, what you're doing is you're taking a leverage position in that stock. So the question is, if you have limited capital, do you want to now leverage your capital even more? So that's the question only you can answer. I think that you want to be careful with using leverage because if let's say you only have $10,000 and now you can trade a $35,000 position, you're just simply increasing the risk of your total portfolio. And only you can answer whether that's an appropriate amount of risk for your portfolio or not. So just be aware that you are leveraging your capital if you have limited capital. Can you please explain the Greek in a trade example? So Marco, I don't quite have enough time on that today, but I do have a specific video on YouTube. If you subscribe to our YouTube channel, which is youtube.com/optionsplay, I do have videos on the Greeks, and I just posted a link into the chat window. But one of the things that I can show you is that the price slider shows you delta. It shows you how the value of your option will change as the stock moves higher, as the stock moves lower. So this price slider actually accounts for both delta and gamma. The time slider accounts for theta, which is time decay. And then the volatility slider accounts for vega, which is volatility. So you can learn more about this using the videos in my YouTube channel. Currently doing bear put spreads on all indices. Use OP today to help me select some. Doing quite well. Michael, great. Thank you so much for sharing that. And that's exactly why we built this platform, so that you can take your ideas analyze them, make sure they align with what you're expecting, and then so that you can place that trade. It doesn't mean that you'll make money on the trade, but it means that you'll know exactly what to expect after you place the trade. And that is really more important than anything else. The worst thing is placing a trade and then not knowing why you've lost money or made money. That is the worst thing, because you don't really know whether you should stay in the trade or exit a trade. If you know exactly what to expect, it'll help you better plan for that and know exactly when to get in and when to get out. Should I put orders half an hour after the market opens or 1 hour after the market opens? You don't have to wait that long. Just even a couple of minutes after the market open is fine. You know, within 1 minute, once the bid-ask quotes start to tighten up, you can start placing your orders. You don't have to wait half an hour. Maybe back in the day you did, but certainly not in the days of electronic market making. Usually about a minute is all you need to start placing trades. Do you have educational videos on selling iron condors? So I do not have one specifically on iron condors. What I do have is a lot on credit spreads, because an iron condor is really just two credit spreads. It's a put credit spread and a call credit spread. And I talk about the best practices for each one. Now, Matt, an iron condor is really just the two strategies merged into a single strategy. The only difference between an iron condor and these two strategies is really how you manage them, because you can, as the stock moves to one side, you can move the other side and turn it into kind of an iron butterfly or a narrower iron condor. But you know, that's really the only difference between those strategies. But I will look at doing a video soon on selling iron condors. Do you cover leaps? Yes, I have a specific video on leaps. It's actually one of our best performing, or one of our most watched videos on YouTube. So please go on our YouTube channel, search for leaps. And there is one that I recently recorded earlier this year that gives you kind of the breakdown of leaps and trading diagonal leaps. What are your preferred indicators on Thinkorswim? You know, I've been a very long time user of what's called the Woody CCI. I'm a big fan of this commodity channel index indicator. It's one that I use a lot in my trading. It's the one that I use on my market outlook sessions. So, you know, I use CCI a lot. But again, you know, for those of you that looked at my technical analysis back test, you know, the indicators, they don't have a big performance difference. It's not like if you use one indicator, you're going to get so much more profitable than the other one. It really just depends on what suits you in terms of what you're familiar with, what you prefer using. I like using CCI, but you can really use any of them that you like. SPY trending down. What do you think about shorting puts at this time? You know, for those of you that like to buy the dip, I think selling puts is a very interesting time to go about doing so. If you believe that this is still another buy the dip, I'm not quite convinced as that, but so far support levels are still holding on SPY, QQQ, all of the major indices. But even today, we broke below some of those major support levels. So I am concerned about selling puts here at the moment. Some of us are at work when the market opens. So, you know, this is really where you have to figure out what works for your schedule, right? You know, if you are at work and you're not trading very often, right, then what you should do is you should have a system where you place your orders, make sure that you have stops and limits on hand for each one of them, and then you simply you know, let the stops and limits work their magic, if you will, right? You know, these days, mobile platforms are pretty easy for order entry, but I do, again, if you're going to trade, you know, you can enter orders before the market opens, but you can't be surprised if sometimes you get a poor execution. You're just simply going to get better execution if you know where the market opens and you're going to enter your orders near the midpoint. You're just going to bet better executions. You can enter them before the market opens. You may not get the best executions. Daniel, thank you for telling me about SPY and QQQ on the cover call and short put reports. I will take a look at that and see if we can get those expanded, those lists. Is it possible to add the stock description to the list? I'm not sure what you mean by stock description. If you don't mind clarifying, makes sense. Is there a filter to check stocks for making a pullback? So we have scans that are basically, you know, for example, we have a dip in bullish trend. So these are stocks that are trending higher, that have pulled back and are now trending higher here. So we do have some of these scans built into these. So this is SIBO. stocks that have pulled back here in a larger, broader trend. So as you can see, the larger trend is here. It's pulled back here. And this is the opportunity that we see here to the upside. So as you can see, it pulled back here. This is the opportunity. We've seen another one here, and we're looking for that continuation higher here. So we have a few different scans. So dip in bullish trend is really kind of your pullback, if you will, indicator. Following short strangles from Tom Sosnoff, I adopted them 12 times, but encountered huge losses on the other side of one leg. Which losses are so big? What's the good strategies for mitigating that loss? So, I mean, here's the thing, right? When you're selling a strangle, you truly have unlimited risk. That's a risk that you're taking. There's really no way to truly mitigate that unless you trade a different strategy. You can trade iron condors, which are similar to a strangle, but they have limited risk. That's one way to mitigate your risk. But if you're going to sell strangles or straddles, unfortunately, that's the risk that you're taking when you're selling strangles and straddles. Bullish trade ideas in the platform seem to always be in the form of buying call spreads and setting put spreads. So Lewis, this is something that we are also expanding. We're actually in the process of revamping our entire platform. That's going to be coming out here towards the end of this year and beginning of next year. And included in that, or once we launch the new platform, we're going to include neutral strategies. So you can sell put credit spreads. The reason that put credit spreads don't show up under bullish is because it's a mildly bullish strategy. It's really more of a neutral strategy than a really truly bullish strategy. But it is something that we are looking to add to our platform, Lewis. Rudy, thank you so much. I really appreciate what you're saying. I need to focus on what it is I can and want to do. Any suggestions? I feel like I'm going here and there if you can understand what I'm trying to say. So Rudy, why don't you send our team an email here using the questions ask us section, and I'll try to help navigate and have my customer service team help kind of navigate you and give you a better idea as far as where to start. Okay, that covers the questions that I have time for here today. I really appreciate everyone taking the time out here this afternoon. I hope that this was helpful in giving you a better understanding as to how to utilize the OptionsPlay platform and the different resources that you have available to you. And again, if you have any questions, feel free to ask us your questions, and we'll try to direct you, in the direction that you need help with. With that, thank you so much. I hope you guys have a great trading day, and I'll see you guys tomorrow morning. For those of you that are on a free trial or a member, you get access to our rapid fire session tomorrow morning at 8:30 a.m. So I'll see you bright and early, and I'm looking forward to showing you the symbols that you have submitted that we like from a technical and fundamental perspective. With that, thank you so much and have a great trading day.